If you use the SoFi investing app, you probably enjoy their commission-free trading model for investing in both stocks and in crypto. Unfortunately, the IRS doesn't feel the same way. While there are no commissions or fees to buy or sell stocks or crypto on the SoFi investing app, Uncle Sam still wants his cut of the profits, right? So if you're wondering how to pay taxes on your SoFi stocks and crypto, I'll help walk you through everything you need to know. We're gonna break down how stocks, dividends, and crypto are all taxed on SoFi. So for starters, let's break down what you won't owe taxes on SoFi. Firstly, no matter how much a stock or an ETF you bought on SoFi, no matter how much it increased in value, you won't owe taxes on it if you only bought but you didn't sell. Secondly, if your investments are in a retirement account, such as a SoFi IRA, your taxes are deferred until retirement age. And alternatively, if your investments are in a SoFi Roth IRA, you'll actually receive tax-free growth on that account. That's because both those accounts are tax advantaged. Let's now break down what will make you eligible for owing taxes on SoFi. Because as you know, guys, nothing in life is free. And much like the income you earn from your job, the income that you earn from your investments is also taxable in the United States. Whenever you sell an asset on SoFi, such as stock, an ETF, or even crypto, a taxable event occurs. Because when you sell your asset for a profit, you experience what's called a capital gain. For example, let's assume that you bought a share of Microsoft stock on SoFi for, let's say, $200, and you later sold that share of stock for $250. Well, you just experienced a capital gain of $50. And capital gains from investments can be categorized into two types. You have your short-term capital gains and you have your long-term capital gains. The good news is, guys, there are investment strategies that can be used to help reduce your tax burden. So let's now get into some of those strategies on how to reduce your taxes from both capital gains and from both dividends in your SoFi taxable investing account. When it comes to capital gains and taxes, when holding stocks for over 1 year, you are taxed at the long-term capital gains rate. If you buy a stock on SoFi and you sell it within 1 year though, or 365 days, your gains are classified as short-term capital gains and they're taxed as ordinary income. This means that your profits are taxed at your ordinary income tax rate. Yes, this means the same tax rate that wages from your job are taxed at as well. However, if you buy and hold a stock for longer than a year, or more than 365 days before selling it, your gains are then classified as long-term capital gains. And depending on your tax bracket, this could provide you with a tax savings of up to 20%. And even better, guys, if you fall into the 10 to 15% tax bracket, your long-term capital gains rate could be 0%. Yes, that's absolutely right. By holding on to a stock for at least 1 year, you could potentially end up paying no taxes on your profits when you sell. Now, if you want to see how the capital gains tax rate applies to your specific tax bracket, be sure to check out this capital gains tax rate chart right here for reference. Of course, guys, these are the current capital gains tax rates for this current year. You can always stay up to date with the latest tax rates on the IRS website. Next, I want to discuss how dividends are taxed, because if you earned any dividends from your stock holdings on the SoFi investing app, you will actually also need to pay taxes on those dividend income as well. Because when it comes to the taxation of dividends, guys, they are actually also split into two categories. You have your ordinary dividends and you have your qualified dividends. Now, ordinary dividends are taxed as ordinary income. Again, that means at your ordinary tax rate based on your tax bracket. Qualified dividends, on the other hand, are taxed at a lower rate. You see, ordinary dividends, they're taxed between 10 to 37%, again, based on your tax bracket. This also varies by year. Qualified dividends, on the other hand, they're taxed at rates of 20%, 15%, and even 0%, also again, depending on your tax bracket. If you'd like to see how the dividends tax rate applies to your specific tax bracket, again, guys, feel free to check out this tax rate chart right here for reference. Again, these are the current dividend tax rates for this tax year. You can always stay up to date with the latest tax rates on the IRS website. Now, in order for your dividends to be qualified dividends, there are some specific criteria they have to meet. We're not going to go over that in this video because it is a little more detailed. The main thing you have to know is it mainly has to do with the holding period, or how long you held onto that stock. On your SoFi tax form, which I'll show you how to retrieve in just a bit, it'll actually break down how much of your dividends were qualified dividends and how much were ordinary dividends, so they essentially take care of you there. As you can see, you can experience significant tax savings on both capital gains and on your dividends earned by holding your stocks for at least 1 year before you sell. This is another advantage, guys, of investing for the long term. So when it comes to your SoFi investment account, whether you sold your stocks for a profit and you experienced a capital gain, or you simply earned dividends from your holdings on SoFi, a taxable event did occur in each scenario. Let's now get into capital losses and tax deductions. So what if you experienced some investment losses on SoFi during the previous year? Well, my friends, you're in luck because you can actually use those losses as tax deductions to help offset some of your capital gains, also known as your profits. Now, if you lost money, let's say, from a bad investment or a bad trade on SoFi, you can use capital losses and capital loss carryovers to your advantage. Together, these are two things that can help you earn back a percentage of what you lost. Now, capital losses, guys, when it comes to capital losses, they're the exact opposite of capital gains. It's the easiest way to put it. Capital losses occur when you sell an investment for less than you paid. For example, let's assume you bought, let's say, some Microsoft shares for $250 a share, and you later sold these shares of stock for $200. Well, you just experienced a capital loss of $50. Fortunately for you though, guys, when you sell stocks at a loss, your capital losses can be used again as a way to reduce your tax burden of both your current and your future capital gains. Now, you can claim capital losses up to the full amount of any capital gains that you have. And essentially, capital losses from bad investments can again help offset taxes owed from your profitable investments. Beyond that, you can use up to $3,000 of additional capital losses to offset other sorts of ordinary income. And ordinary income is any type of income earned that is taxable at your ordinary tax rate, such as income from your salary and your normal wages. And again, any remaining capital losses over the additional $3,000 limit are then classified as capital loss carryovers. This means you can carry over those additional losses to the following year or even following years to offset future capital gains. There's also no limit on how many years you can carry over capital losses. Together, guys, capital losses and capital loss carryovers can really act as a type of tax deduction for investors. They make it possible for investors to recover part of their losses on their tax returns by again offsetting capital gains and other forms of ordinary income. Alright, so before I show you how to pay your taxes on SoFi, let's take a quick second to discuss how crypto is taxed. Because since cryptocurrency is such a relatively new technology, guys, the IRS's rules regarding it could change at any time, so keep that in mind. But in the meantime, the IRS does treat cryptocurrency as property rather than as cash. Essentially, crypto is taxed in the same way that stocks are taxed. There are no tax consequences for purchasing crypto on SoFi or for transferring it between crypto wallets held in your name. However, you are required to pay income tax on any profit you earn from selling your crypto. Similar to stocks, both short-term and long-term capital gains tax rates also apply depending on how long you held the cryptocurrency. Now, while buying cryptocurrency isn't a taxable event, any free crypto you earned could be. So if you received any free cryptocurrency as a gift, the amount could be taxed as income. Also similar to stocks, capital losses do apply to crypto as well. So if you experience any investment losses from trading crypto on SoFi, you can actually use those losses to offset any other capital gains you made as well. Alright guys, so let's bring this all together now and explain how you actually pay your SoFi taxes, right? That's what you're here for. Now you may be wondering, how are you supposed to actually keep track of all your capital gains, all your capital losses, all your dividends in order to accurately pay your taxes? Not to worry guys, SoFi completely takes care of all this for you. Throughout the year, they automatically track all your stock buys, all your stock sells, all your dividends earned. They track everything for you. Then every year come tax season, SoFi provides you with what's called a Form 1099 tax document. Now, generally speaking, guys, the 1099 tax form calculates all your investment income, including your capital gains, losses, and dividends, and your interest earned in the previous year. Now, when your tax forms are ready, you should receive an email from SoFi, and to retrieve your SoFi documents, you're going to just follow a few simple steps. So let's hop right into the SoFi app so I can show you how. So once you're inside the SoFi app, guys, on the home dashboard, you simply want to click on your profile icon in the top left. That's usually the icon with your photo right there. Once you click on that, you're going to go down to the fourth section where it says Document Center. Click on Document Center. Once you're inside your Document Center, you'll then see the option to retrieve your documents where it says Tax Statements. Simply click on Tax Statements. You're then going to select your tax year, click that, and you can choose your tax year. Once you click your tax year, it'll then open up your tax form, your 1099 tax form, which you can download directly from the app or the SoFi website, and you essentially have your tax form at that point. Also, if you traded any crypto, you may receive a crypto 1099 form as well. Now again, guys, if you don't see your tax documents for the current tax year in your SoFi app, that means they're likely not available yet in the app, but this is where you'll find your tax forms so you can download them once they're ready. And after downloading your 1099 tax forms, they can then either be imported into your favorite online tax software, or they can also be handed directly to your CPA or your tax professional. A quick tip I have for you guys is if you're using online tax software, many of them today offer direct importing of your 1099 tax forms, where the software automatically imports all your capital gains, all your capital losses, all your dividends, etc. And depending on if you have more capital gains or more capital losses, the software instantly updates. Either it'll automatically adjust the tax you owe or your tax refund amount, again, on your regular tax return. Now, for full disclaimer, I am not a tax professional, nor am I providing you legal or tax advice. I just want to give you an overview of the key points you need to know about filing your SoFi taxes. If you need tax advice, of course, always consult your CPA or your tax professional. Again, if you'd like to check out some of my recommended options of different tax software for using with SoFi, I have referral links down below with discounts. Now, if you enjoyed this video breaking down SoFi and taxes, I definitely recommend checking out this video right here where I compare 5 of the top online tax software to consider using with SoFi. From free to paid options, you're sure to find one that works for you. So click on over and I'll see you in that video.